This is Patrick MontesDeOca with the Equity Management Academy live trading room, streaming live from YouTube. Today is the 18th of August, and we're going to be looking at the weekly review. We'll take a look at the Nikkei Roba Advisor weekly reports for gold, silver, and Bitcoin. And we'll see where the market so far has, what the market so far has done, and what we can be looking forward to in the very near future. So stay with me. We'll be right back. Let me take a look at the live trading room here, and before we get into the markets here, I want to review the weekly reports that we posted on Saturday. And let's see what it says.
Hello everyone, this is Equity Management Academy, with a weekly gold report for August 13th, 2021. Summary. The weekly trend momentum of 1778 is bullish. The weekly VCPMI of 1747 is bullish price momentum. A close below 1747 stop negates this bullishness neutral. If long, take profits 1816 to 1848. Trading instructions. Weekly trend momentum, 1778 bearish. The gold futures contract closed at 1778. The market closing below the 9-day SMA 1778 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum, 1747 bullish. With the market closing above the VC weekly price momentum indicator at 1747, is confirmation that the price momentum is bullish. A close below the VC weekly, it would trigger weekly stops and negate the bullish trend to neutral. Weekly price indicator. Exit. Longs, sell 1, 1816. Sell 2, 1848. Exit. Shorts, buy 1, 1712. Buy 2, 1643. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 1712 to 1643 and go long on a weekly reversal stop. If long, use the 1643 level as a stop close only and good till cancelled order. Look to take profits on longs as we reach the sell 1 and 2 levels of 1816 to 1848 during the week.
I wanted to review this report so that we can see pretty much what the market, first of all, has done so far. And bear with me 1 second. I want to bring up the Thinkorswim chart here that we're going to be able to see a little more clearly. The low that we made was 1677.90 on the 9th of September. And the report, let me just take a look at it again because I'm reviewing with you right now the report myself to do the analysis and show you pretty much what and how I take a look at applying the VCPMI. It told us basically that the weekly trend momentum was 1778. Now, the weekly trend momentum is the first filter that we use that identifies the trend momentum of the market, which essentially is the trend momentum, whether the trend is up by trading above this indicator. It's a 9-week moving average, or trading below, identifying the bearish trend. So this is the initial filter that we use that identifies the trend momentum of the market. And this is the pretty much algorithm that was written in C++, an easy language in TradeStation. And what I'm doing here is for the purposes of my traders in my trading room, for the purposes of those interested in applying a very independent tool to your decision-making process in your trading, mathematically, using a probability model, the VCPMI is an excellent instrument that is helping me stay alive through all of this. I've talked to the majority of traders that I work with, and people that I talk to just are completely confused as to what the market is doing. And one of the things that I want to share with you today, after taking a look at this situation, particularly from a very, very objective perspective, in looking at what the data is showing. And so, obviously, there is something going on, and that's called a reset. The monetary system is in the process of resetting itself. And since last March, when we had the pandemic, the system broke. The markets are broken. They broke in March of last year. Everything fell apart because of the pandemic. But the gold market rallied $600. The stock market made a bottom, 2,100 and change. And we've never been back there, and the stock market almost doubled, and obviously we're trading gold at 1787, 88, under 1,800. That's 200 or 300, almost $300 lower than the high was made. And yet the stock market continues to rally, making new highs, irrespective of these fundamentals that are completely broken. So what we're looking at is the markets looking to recalibrate themselves, finding its true value based upon what's happened here with regards to the US dollar as the value underlying asset. And what we have seen here is a tremendous amount of stimulus coming into the market, that has come into the market, on top of a close to $30 trillion debt that is just seems to be irrelevant, or not making much impact into the possibility that if interest rates do go up, we're talking about a total debt, including unfunded liabilities, of about $85 trillion. So interest rates cannot go up. Now, is the market going to go to a point where we're going to downgrade U.S. bonds? It's a possibility. As they continue to print money, Mr. Biden, President Biden, continues to print money. The Feds, Chairman Powell, are in the same boat. We're going to be looking at an explosion of the monetary base, and we are going to accelerate the devaluation of the U.S. dollar as the world's reserve currency. And there are a lot of people, there are a lot of countries that are beginning to question, how can the U.S. dollar be the world's reserve currency with a, debt of that magnitude? So I'm finding a little bit, confusing myself as to why gold and silver are where they are when everything else has exploded up. Commodities up, 40, 50, 60%. The stock market doubled. Inflation is at 5.4%, according to, the PPI and some of the economic indicators that came out. The 10-year note is trading at about 125, 130. So, it doesn't take a PhD in math to calculate that we're down about 3 to 4% in purchasing power in the U.S. dollar, which can be devastating on a long-term basis. So what I'm finding is that for the time being, the inflation that we have seen is in commodities. And for whatever the reason, obviously, is in terms of gold and silver, they've been able to manipulate the market and keep the market down at these levels, just like they are doing interest rates. So it's a little tricky for the Feds to decide what to do here in the next meeting that's coming up. Are they going to stay neutral? Or are they going to warn that tapering is going to occur a lot sooner? So these are all the things that I'm saying fundamentally are confusing the markets. And trying to figure it out fundamentally is really, very, very difficult. So for me, for my trading, I use the variable changing price momentum indicator. Coming back to Nikki, the robo-advisor is able to give me the AI that I need to make an intelligent decision for myself as a trader, mathematically, systematically. For example, it identifies, coming back here to the first filter that we use, the trend of the market. Let's take a listen again to the next phase, and we'll take a look at the other filters individually. And I'll break it down for you basically in terms of what this is saying. So just to review, the weekly trend momentum at 1778 is bearish because the market closed below it. Or at the average from above is bearish. But it tells you here also, even though it gives you that bearish indication that a close above the 9-day, a close above 1778 would negate this bearish trend, short-term to neutral. It would negate the bearish trend. Okay, so let's see where we are.
The 9-day SMA 1778 is confirmation that the weekly trend momentum is bearish. A close above the 9 SMA would negate the weekly bearish short-term trend to neutral. Weekly price momentum, 1747 bullish. With the market closing above the VC weekly price momentum indicator at 1747, is confirmation that the price momentum is bullish.
Okay, the weekly price momentum is the VCPMI. This is the mean or the average price for the week, for this week. And obviously, trading last at 1788, the market trading above it is bullish so far. Now, I use this level as an indication of the mean or the average of the mean that identifies very, very specifically the targets above or below. With the market closing above the VC weekly price momentum indicator at 1747, is confirmation that the price momentum is bullish. But the algorithm also gives you the other side of the coin, and it tells you that a close below the VC weekly, the variable changing price momentum indicator weekly, it would trigger weekly stops and negate the bullish trend to neutral. It means that you can take profits here at these levels as a second protective indicator. This identifies the price momentum. The first filter was the trend momentum. And here you get the price momentum also very specifically identified above or below the mean. And this is where the reversion to the mean begins to take place. If the market trading right now at 1786, 87, it got up to as high as this so far 1797.60. It's bullish. It's trading above it. So either you can use this as your price indicator, meaning if we come down here at 1747 and closes below, you can go neutral or you can stop out of your position. Or you can, trail the position with a higher price. But this tells you exactly when the reversion to the mean has occurred. So the market trading at 1786, and
below the
we're looking at the daily numbers now that we're looking at is about 1796 to 1805 coming into here for today. What we saw here yesterday was the market reaching above touching 1796. 97.60 was the high and has activated a short trigger. The high today was 95.70, was close enough. Now, this is the second time that we are reaching this sell one target. So I'm looking at the market short term, which is daily, and we use the daily numbers, as you can see here. And I'm also using the weekly numbers. These numbers are the numbers that were identified as the weekly numbers by Nikki, the robo-advisor. Now, the weekly is saying we can get up to as high as 1816. If we do, you're entering the first target of the weekly. And so far, this target is active because the market closed above the weekly price or the weekly price momentum of 1747 that I just read you. And although it hasn't yet reached the target of 1816, I'm using the daily numbers to guide me in seeing what the market is doing short term, daily, day by day. The weekly is weekly. So what this is telling me here for today is that so far, the last 2 days, we've tested 1796 into this area of distribution of supply. And you can see the resistance begin to form.
DC Weekly, it would trigger weekly stops and negate the bullish trend to neutral. Weekly price indicator. Exit. Longs, sell 1, 1816. Sell 2, 1848. Exit. Shorts, buy 1, 1712. Buy 2, 1643. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 1712 to 1643 and go long on a weekly reversal stop. If long, use the 1643 level as a stop close only in good till canceled order.
So what this is saying basically is that if we trade below in this case, the daily now is 1789 as we come into today. And we got up to 1796, and we are trading below the average daily. So it appears that we're getting supply on the daily signals. And so far, they are leading the way in terms of supply. And if we close below the average price, then we're looking at activating that 1781 to 1774 on the daily numbers. And then we want to see what the market does, when it accomplishes those levels and potentially reverting back to the mean of 1747, which is the weekly average. So I've recommended my traders in my trading room, in my private trading room, and also pretty much my client base, my subscribers in Seeking Alpha, as I write for the Associated Press, that you want to be cautious up here. The gold market, I put out this special update yesterday for my private trading room at about 10:38 in the morning, and pretty much it said the gold market has failed to follow through above the 1800 levels of distribution of supply. It seems that there are sellers of supply than the demand at these levels. The daily data has identified the short trigger at the sell one level of 1796. The mean target of 1784 was completed, and a close below 1784 activates bearish price momentum with 1777 to 1765 targets daily. The weekly mean is 1747. So we want to be cautious up here. We've taken some protection. I've recommended basically to hedge up here and protect any gains that you have, and let the market take us. So what this is indicating is, contrary to what everybody else out there seems to be looking at in some of these gurus in on the internet, $300 higher in gold, we're still continuing to put out some incredible recommendations. In terms of the price of gold and silver, that I don't believe most people really understand what the implications are in terms of the price of gold being at 1900. I wanted to focus, I'm sorry I took so long here, in terms of doing in the gold market. I was hoping that I would get a chance to take a look at the other weekly reports, but we can do that, or you can feel free to go to my YouTube account, click on latest from Patrick MontesDeOca, and it will pretty much take you to my YouTube channel, and you can see all of my videos that I do live, and also reports that we publish here for the benefit of self-directed trading traders from a completely mathematical point of view, using algorithms, using the reversion to the mean principle. The silver market is following pretty much the same pattern as the gold market, in that it's in a bearish trend momentum. It has failed to follow through to the upside, and it appears that now it wants to potentially test the lower end of the weekly numbers, which is 2256, all the way down to 2139, following the same principle. Bitcoin is in an area of distribution of supply weekly, and so you can see the market stalling at this area, which is called, again, distribution of supply, that identifies the probability factors. You're looking at a potential, if the market is going to revert, this is the area where the probabilities are high. If the market follows through to the downside with the signal here, you can see the challenge here, but 1195 is 41,195 is the average mean, and that's where potentially we're going to see tremendous support. If we do come down there, potentially we can break above and pretty much complete this weekly pattern with support for higher fractals by closing above 47,329. I want to thank everybody once again for allowing me to share this information with you, and I hope that you got a better understanding of the application of the variable changing price momentum indicator, which I use as a GPS for my trading. Have a great trading day, my friends, and we'll talk to you soon. Talk to you next time.